Hey everyone, wanted to welcome you to another Lakeview Mortgage Bankers podcast today. I'm joined with my coworkers Dylan, Zach, and Stacey.
How we doing?
What's going on, everyone?
Today we wanted to talk about a few things that's going on in the market. And right now we know that everybody's talking about interest rates. It seems to be the topic of conversation. Am I right?
Of course.
100%.
So now more than ever, it's important for the people that we're dealing with, which is our clients, to have trust in their partnership, which of course is with us. And one of the things that we like to talk about is there's three critical traits that we want to make sure our clients all understand of what we do. First one, of course, like I said, is trust. Trust means that they can not only trust us and know our knowledge of the industry is solid, but also trust in knowing when they come to us, we always like to ask a question is, what are you looking to accomplish? What do you want to do, right? Why are you here with us today? What's your ultimate goal? So we want them to trust that we have that in mind, that we are taking what they want and we're now going to try to deliver that to them. The second trait that we want to deliver, like I said before, was knowledge. And the knowledge is really the knowledge of the business. Because now, of course, we know that the business is constantly changing. It's a never-changing battlefield, as we all know. So we want to stay up to date on all the trends, all the policy changes, all the plans. This way we can give all the advantages to our customers.
Of course.
You guys agree?
Yep.
And all the new
definitely.
loan products that are coming out with constantly.
100% agree. 100%. And finally, the last trait that we want to make sure that we bring to everybody's experience, which that's why we're here today to talk about our experience. And that what I basically mean is that we've been involved to show that we have a proven track record. We've been down the road before. The ups, the downs, the goods, the bads, a little bit of everything. And that's what you really want on your team because that way you can ensure that we have your best interest in mind and we can have success at the end. That's what we like to do.
Yeah, 100%.
Absolutely.
Everybody agree?
Yeah, and I think Lakeview definitely covers all three of those traits right there. I mean, experience, we've been in the industry for, 20 years now, Lakeview. We've been through the 2008 housing crash. We came out on top. We're still here. Knowledgeable. We stay up to date with everything all the time. And trust. I mean, you can definitely trust us.
Another thing I think is really important, which I hear from other people in the industry, is that a lot of MLOs don't follow through. They don't call people back. I've been referred to people from real estate agents that their client had a loan officer that wasn't returning phone calls, wasn't answering questions, just dropped the ball. Like none of us would ever do that, ever. I mean, what's the purpose of being in this industry? It's a service industry. We want to
That's what we're
follow
here
through.
for.
We want to make sure that our clients know if they have to call us during the week or on the weekend or at night, we're always available. We have their back. We follow through all the way to the closing table.
Agreed.
Agreed. That's what we're here to do. So we're going to touch up upon a few things, like Jason said, interest rates and what to do to prepare, with the new year, tax season upcoming, how to prepare if you're looking to qualify for that new mortgage.
Yeah, and speaking of that and speaking of being knowledgeable, this is what we do. We always update our clients. We let them know. We inform them what they can do to qualify. And right now, a lot of people didn't qualify in the past year because in 2020, I mean, a lot of people's income took a hit because of COVID. People weren't working. They weren't even allowed to work. So obviously it was a down year for a lot of people. But now, coming up in 2023, you will not have to use your 2020 income. So we could go off your 2021 and 2022, and we could get you to qualify for more. So if you want to get qualified in the past year or two and you weren't happy with your approval amount, you should definitely reach out to your loan officer and try to get that updated in the next year or two.
Right, and to
even
piggyback
out.
off that, what that really means is we need 2 years worth of returns, which is why Zach was saying that. So in the past, obviously, we would have needed 2020 and 2021. 2020 was impacted for a lot of people. So that is going to be a big benefit that people may not be aware of. Hopefully, most people are kind of back on track right now, with 2021 and 2022 being somewhat back to
Everyone should
normal.
be
We
back
like
up
to
and
call
running,
it.
yeah.
Right?
100%.
So then that obviously will eliminate the downfall, and we don't have to worry about the averaging of income, which ultimately just becomes a bigger headache for everybody.
Yeah.
Definitely.
And I mean, we're way ahead of the game. A lot of the banks you speak to, you're going to go to them and they're going to say, yeah, it's 2022. We still need that 2020 W-2 or tax return. But for us, we can implement that for you right now. Because, I mean, right now, it's middle of November when we're recording this. If you start looking right now, odds are you're not closing until 2023 anyway. So we could implement that 2021 and the most recent pay stub you have for this year right now and qualify you for 2020 going forward right now.
And that piggybacks off of our experience part, like we said, because had not knowing these things, we wouldn't know that these are the things that you're able to do. So having, people not in the business or maybe not being through the ups and downs that we've been seeing this year or the previous years, we now know how to get through it because we've got that track record of being down that road and how we got past it.
Yeah, it also piggybacks on the trust, too. When you speak to us, you could trust that no matter what, we're making sure we get you qualified for the most that we can. Whereas you speak to another bank, they may not have even thought about that. You may not necessarily feel that safe for that pre-approval.
Right.
True.
You know?
So that's just something to think about when you're going to, you're thinking about buying a house in 2023, you're going to file your taxes, to prepare, file as much income as you could. But another thing I wanted to piggyback off of is something Jason said in the beginning is interest rates are obviously very high right now, right? So a lot of purchases is going on, but we haven't really seen many refinances, right?
True.
So if you think about it, when mortgage interest rates are going up, your credit card interest rates are going up as well. All right. So household debt's increasing, at an insane pace, the highest it's been in the past 15 years. I actually read an article that said the credit card debts combined about $930 billion.
Wow, that's a lot of money.
So what you could do is think about a cash out refinance on your mortgage. I'm sure everyone has some equity in their house right now. So what you could do is cash out. Interest rates are still high, but would you rather pay a 7% mortgage rate or a 30% credit card interest?
Right, it's a no-brainer.
Right.
And speaking on that too, in the past year, house prices soared over the past couple of years. So if you own a house right now, odds are you're probably sitting on a lot of equity that you can pull out of your house.
Definitely. Inflation's up. Everything's more expensive now. So people are charging a lot on their credit cards. There's a lot of debt. So even though interest rates are high in mortgages, again, they're going to be even higher in your credit cards. So take advantage of that equity in your house. Get that cash out, pay your things off, and consolidate your debt.
Especially before the holiday season.
Exactly.
Start charging. They should get it
Yeah.
done
Good
now.
point. Yeah. You
wanna
want to
start
buy those
doing that
holiday
now.
gifts too. You need some extra money.
Correct.
You're going to, cash out, get the money from your house.
100%.
Absolutely.
Yeah, I mean, people, they hear rates in like the 6%. They think that sounds so high, but if you had a credit card with that rate, you'd
Right.
be ecstatic.
Yeah.
It's probably 4 times that amount,
Exactly.
maybe even more.
If
Right?
you're lucky.
Exactly.
Consider that, don't get so scared with the rates. And, rates are still, 6.5%. It's still a low rate. We got, a little lucky in 2020 with the 2s and the 3s, but this is where it's going to be at. And you always want to make sure you consolidate your debt and use that equity in your house.
That is a good point too. A lot of people, they've gotten used to how low rates were over the past couple of years, but like historically, they're not that high right now. I mean, I'm sure you guys, when you bought your first houses, you would have been very happy to get a rate where they are right now.
Sure. I think the biggest thing is it's an adjustment period too that everybody has to get used to it. And it's a shock. And right now we have so many different things going on in the world that the news just comes out and shocks us and kind of just rolls over us and we go on to the next story. And that's the way it is. So I think when everybody gets the adjustment period past that for the rates right now, and that's one of the main reasons I think why we wanted to do this podcast today, is to let everybody know that it's not doom and gloom out there. We're still doing business. We're still writing loans, and our doors are open, and we're happy to say that we're still helping people.
Exactly.
Even
Right.
if somebody needs some advice, you could always give us a call if you have any questions about your credit or about what as far as like what you think. If you need advice on anything, we are always here to offer any free help and free conversations, whatever you guys need, advice or anything.
Yeah, and even like Zach said about the tax returns filing for the new year, if you're not sure what you need to
Right.
do before you
Reach
go
out.
speak with your accountant, speak with your loan officer.
Exactly.
Make sure you have what you need to qualify, because when you're
Correct.
self-employed and we look at your tax returns, we're going off your net income.
Right.
So we want to keep the expenses low, and that's a great option if you're looking to buy in 2023.
Another thing is if they pay off the credit card with a refi, it brings up their credit score, which is huge also.
course.
If you have credit card debt and it affects your credit score as well.
And speaking of that and preparing for your income on your tax returns too, you should also be preparing to get your credit to where it needs to be, which of course is something that we can help with as well.
Absolutely.
Certainly.
All right, good. So hopefully that helped everybody feel a little bit better.
Yeah.
Something I wanted to discuss today is, aside from what we do in house, Jason and I. It's actually a very funny story. We one of the realtors' office that we deal with. We went to bring them breakfast one day, and very nonchalant, I was speaking with the woman behind the counter, trying to get the orders of the real estate office, what they eat for breakfast, the bagels, whatever. And I said to her, we're bringing them breakfast because we're a mortgage company. And I said to the lady, the manager, I'm like, if you ever need anything, here's our card. I turned to my left, and the lady next to me online was like, really? I go, yeah. Why, you're interested in a mortgage? She goes, yeah. Jason was wearing his T-shirt. I pulled her off the line after she ordered, of course, and we started talking to her. She said, my mom's in the car. She's in the middle of doing a purchase. Her MLO dropped the ball. She was having issues with the real estate agent. Jason's like, well, let me hear what's going on. Let me see what we could do for you. And she had her order, went with her mom, gave me her cell phone number. We dropped off our bagels, called her, met them in Starbucks, and we
And they'll be closing their loan in about 2 weeks.
2 weeks.
So that's
Love
an
that.
ultimate
I mean, it
success
was-
story
it
of how.
was
So we can go
trust.
out and talk to people.
Yep.
Stacey does the intro by having the friendly approach, and then what we basically did is when she told us that she needed something, which again is the trust, the knowledge, and the experience. We didn't even let her sit on it. We said, when can we meet? We wanted to. We met her in Starbucks that afternoon, and by the end of that afternoon, we had all of her docs from her. Probably by the next morning, we had a new loan submitted from someone who we met online in a bagel store. And that's just one of the things that we do, I think, that makes us go above and beyond any of our competition.
It sets us apart.
The thing that she was saying, which was crazy, was that she felt like the real estate agent didn't have her back. Her MLO, she was really struggling. Like she didn't have anybody that she could turn to except for her, I think her real estate attorney. That was
Right,
it.
right.
So
Who
we
really
took
can't do
over-
anything, who can't do too much to help her in that respect.
Exactly.
Yeah.
So we took over and, we worked with her and she's very, very happy.
Another happy success story.
Again, that just speaks on the trust and knowledge you have in your loan officer. And again, I mean, in general, you're saying getting out there, meeting people at Starbucks, wherever you were. That's something I feel like we do really great as a company too. Is we really get out there and put ourselves in front of the people. I mean, we go to fairs, we put ourselves out there. Stacey,
Open
you have
houses.
A podcast. I do a
houses.
podcast now. But at the end of the day, we want our clients to know that we truly care about them. It's
100%.
not, it's a service, but we truly care about the clients. And that's what's the most important thing. And they know that.
Yeah, and that's why we're going to be doing these podcasts every week to update our clients, keep everyone up to date with what's
Informed,
going on in the market, what's going on in the mortgage business, because things change, like Jason said, daily. Guidelines change, and that's why it's good to have knowledgeable loan officers who are up to date with the times, because there's some loan officers who, aren't updating pre-approvals, aren't keeping up with the guidelines, and things are changing real quick.
Yep.
So that's really what's going to set us apart. We're always going to be here to just update the clients, update everyone on what's going on in the market.
All right, guys, it's been another great episode. Thank you guys for listening, and we'll see you next week.
See you next week, guys.
Have a
See you
good one.
next
Take
week.
care.
And look for us in the local bagel stores and Starbucks.